Hey, welcome back to Innovate Africa. I'm Kieno. You know that by now, though, don't you? And here we focus on impact in Africa. You get the businesses that sort of do the hard work, they create the impact. You get those who support those businesses generally. And then you get those supporters that put money behind these businesses. They VCs, maybe it's debt financing, different instruments. But today I'm going to introduce you to a venture capital fund, the most prolific series to pre-series A fund on the continent. It's known as Launch Africa VC. And I'm joined by founder Zack George. Always great having you on the show.
Thank you, Kieno. Really good to be back.
So you were a Lehman dude. You were in New York, living the life, flying in helicopters, maybe not, but you've moved to South Africa during the World Cup, and now you're investing in African businesses. Why?
Yeah, so like you said, I moved here in 2010. It happened to be the year where South Africa hosted the FIFA World Cup, and it sort of put South Africa on the global stage for the first time. From a venture capital and tech startup perspective, if you follow the trends after Silicon Valley, London, Berlin, and India, there really was a huge gap in the market where the rest of the sort of global south or the emerging markets like Southeast Asia, Latin America, and the Middle East had sort of thought about the idea of using venture capital as a way to grow and fund technology businesses, and Africa was just completely left out. Africa, for many decades post the end of colonialism, was pretty much went down two routes. One of them was you funded a lot of things just through philanthropy and aid and charities and foundations. Nothing wrong with that, but the sustainability and feasibility of that capital is limited. And then number two was huge amounts of investment into what I would call extractive industries. So power, utilities, natural gas, oil, things like that. Nothing wrong with that, but it's sort of using primary resources to what people would often say drain a continent of its biggest resource, which is which is its people. So when I moved to South Africa in 2010, I saw the opportunity to use Africa's biggest sort of resource, which are its people, through technology to create jobs of the future. And it wasn't about copying Silicon Valley and trying to make it in Africa, but to figure out how large corporations in Africa, telcos, banks, insurance companies, retailers, media firms could work with innovative founders to build products that were relevant, viable, feasible, and could work into the future. And that's the whole journey that we've done individually as an angel investor, then as an accelerator through Startup Bootcamp, and now through Launch Africa. But I'm happy to talk about more specifics.
I think we will get into Launch Africa in particular. You've established yourself, especially in the seed pre-series A side of things. So that is truly phenomenal. But moving from the United States, you studied in India,
Yep.
operated in the United States, carved out a good career for yourself. You arrive in Africa. Many a person has arrived on this continent from overseas, decided that, hey man, I want to help the continent. I think I can grow a business here. I think I can support a business here, but they've burnt a couple of fingers, right? So let's talk a little bit about your experience and how that paradigm shift, if any, took place after spending some time here
Yep.
and realizing a couple of truths about the African continent.
Yeah, I think people often forget that the greatest opportunity to create financial, economic, and social wealth
Mm.
is in markets and situations where there's just misinformation and differences between perception and reality.
Yeah.
What I mean by that is if you look at the global economy, so Africa accounts for almost 20% of the world's population. We are the fastest growing
Wow.
population on planet Earth. By the end of 2050, the UN projects that 1 in 3 people in the world will either be African or live in Africa. That's a
Right.
huge population increase, right? But unfortunately, from a GDP perspective, Africa accounts for between 7 to 8% of the world's GDP, even though we have almost a fifth of the world's population. And then if you take it one step further, from a venture perspective, funding perspective, we get at best 1 to 1.5% of all the world's venture capital. So if you're a Wall Street banker, trader like myself, or anyone that can understand finance, that's a huge arbitrage. And when economies mature and markets mature, that arbitrage gets smaller and smaller and smaller every passing year. So what I decided, together with a lot of people in this ecosystem that came here 10 to 15 years ago, is instead of pushing founders of companies in Africa into the recurring spiral, almost death spiral of debt, we said there needs to be more risk capital coming to African businesses, provided you have offtake agreements and a clear path to distribution and scaling. So what we did is I came here and I built something called TimesLIVE Africa, which was the very first accelerator for technology startups in Africa. It took almost 2 to 3 years to get started. We worked with the likes of Old Mutual, ABSA, Standard Bank, a lot of sort of big financial services corporates. And we created a path for them to build innovative products by partnering with founders. So moving internal innovation to external innovation through proof of concepts and pilots. This then eventually got sold to Techstars, one of the biggest accelerators in the world. And that's when the sort of floodgates opened. And Africa, for the very first time, was open to external innovation.
Yes.
That led Startup Bootcamp, one of the biggest accelerators in Europe, often called the Y Combinator of Europe, to then come to Africa. They got me as one of the 2 managing partners there. And we built the first multi-corporate accelerator in Africa that was backed by Old Mutual, by Nedbank, by MTN, by Amazon Web Services, PwC, RCS, Woolies, a whole bunch of corporate partners. That was the very first time that founders in Africa, all over Africa, not just South Africa, using tech to build solutions in fintech, health tech, e-commerce, marketplaces, logistics, etc., could now, for the very first time, partner with large corporates to help understand and acquire customers and use corporate channels and distribution to do so without having to give up or sacrifice their IP.
Right.
And this was sort of a big turning point in the African tech ecosystem where you could use US, European, and Asian style venture capital concepts to help grow startups. So essentially separating SMEs from startups and looking at providing smart capital and funding to tech startups. So Startup Bootcamp was a very successful accelerator. We looked at more than 5,000 companies over 3 years. We invested in 30 of them. We've had several success stories. All our investors have gotten more than 3 times their capital paid back in just 4 years. Our biggest success story was a digital bank in Nigeria called Kuda, Kuda, which is similar to, for our listeners here, it's sort of like Time Bank, but significantly bigger and much larger scale. They're from Nigeria. Several iconic logistics, mobility startups, etc. So the fund has done exceptionally well, and that prompted us to say, if we can fund companies at the accelerator stage, where they are typically pre-revenue or just sort of post-revenue, the next logical sort of stage of funding is post-accelerator, post-angel, which is the seed stage.
Yes.
And seed is a very broad term, but it's basically encompasses companies that are doing anywhere from, I would say, $10,000 in monthly revenue all the way up to $100,000 in monthly revenue. And that chasm or gap, until we came on board 5 to 6 years ago, was mostly filled by angels and small VC funds, syndicates, family offices, etc. So it's quality funding, but it's fragmented. It's not smart capital.
Sure.
So we set up Launch Africa about 5.5 years ago, post the success of Startup Bootcamp and other accelerators. My partner, Janade du Plessis, used to be the chief investment officer of the African Development Bank, which is the World Bank of Africa. He used to run venture capital at Nedbank. And then we came together and built this fund, domiciled in Mauritius for structural reasons, to become the largest Pan-African seed and pre-Series A fund in existence today. And we have lots of other funds that we work with as partners. So we raised $36.2 million, which at the time was the largest venture fund in Africa, focusing on early stage investments. And interestingly enough, as you know, we raised all this capital from individuals and family offices without having to go down the institutional DFI impact funding route.
Yeah.
So it's smart capital, people that would put money to use to grow businesses
Right.
and then share in the upside. So, I mean, 5 years later, we've actually invested in 133 companies all across Africa. So we've covered 22 different African
Yeah.
countries, which is quite a lot.
Yeah.
Most of them are in Nigeria, Kenya, Egypt, South Africa, and Ghana.
Mhm.
But we also have, pretty significant stakes in companies coming out of Tunisia, Morocco, Uganda, Senegal, etc. So, yeah.
The one thing I'm always interested in is the story behind all of this, right? So I want to move on to where you get your capital from. I know you had about 200 limited partners,
Yeah.
a lot of people to manage.
Yeah.
But so as you've just pointed out, you've raised it through the 200 LPs. But tell me some of the stories behind the businesses that you've covered. Not long-winded stories. I'm
Course, yeah.
talking about like sort of pre-seed, interesting insights into some of the businesses that you've invested in that delivers impact.
Yeah, I mean, there are quite a few. I'll try and give you one example each from all the different sectors we've backed. And these are a mix of companies in Fund 1 and Fund 2 that we're busy
Yes.
raising at the moment. So I'll give you an example of a fintech company. Fintech's a huge part of our portfolio. So one of the companies that we were early investors in just 2 years ago is a company called Credete with a K, Kredete.io. And they use remittance data from African diaspora that are sending money back home. And that's a multi-billion-dollar volume industry every month.
Yeah.
So for example, Saudi Arabia to Egypt, sort of Europe and North America into West Africa, even remittances within the continent, so Zimbabwe to South Africa, etc. But all that information, they take that information and they then provide that in an anonymized third-party sort of platform to providers of lending capital. They could be brick and mortar banks, they could be digital banks, and just any sort of unsecured digital lenders. But what people often forget is that you can't just use people's bank statements or their mobile transacting history as a barometer to provide credit. Africa is horribly underserved from a credit perspective. So this company uses remittance data to
Right.
make better lending decisions, but they take no balance sheet risk. They use third-party capital, right? And they make a spread.
Mhm.
Um, they also have now started issuing stable coins,
Yes.
stablecoin-backed debit cards. When we backed them, they were doing about $50,000 to $60,000 in monthly revenue. The valuation was under $10 million. And today they just finished a Series A round recently at a valuation of more than $100 million. So in less than 2 years, right? But they're doing more than $1.5 million in monthly revenue.
Right.
Sorry. That's an example of a commercially viable tech platform in the fintech space that has a huge impact. So we're making more than 10 times our money on this transaction, and we probably exit our position in the next couple of years and
Yeah.
make our LPs happy. Another example, let's say in the healthcare space, is a company in Nigeria that we backed called Orexol, and
Yeah.
medical fraud is a big issue, not just in Africa, but globally. So fake medication or altered diluted medication. So, you can fake barcodes, you can fake QR codes, you can fake even batch processes on drugs, but you can't fake chemistry. So this one particular entrepreneur that almost lost his life a few years ago because of having fake medication
Right.
when he suffered from malaria is he used a mobile spectrometer to analyze the chemical composition of drugs that are prescribed by doctors and backed up by insurance companies. Um, Lab spectrometers can be very expensive. So he
Yes.
created a hardware device, which is a mobile spectrometer,
Right.
which uses infrared radiation to figure out what the right frequency is of a particular batch of drugs based on
Right.
the chemical composition. That device is sold to or leased by pharmacies or HMOs, and is also has a software component to it, a subscription model where pharmacies and HMOs can pay to have batches of drugs verified and vetted before passing them on to hospitals and patients. So again, great business model. It makes a lot of money, but also has a huge impact.
Mm.
I mean, let's talk logistics. I've spoken about Nigeria and West Africa. Let's bring something back, back home to South Africa. One of the businesses that we backed in Fund One is a company called Cloudline in Stellenbosch, and you probably heard of a business called Zipline in Rwanda that
Yep.
uses drones to deliver emergency life-saving blood supplies and packets, within a certain mile radius
Yep.
in Kigali. Well, what if you want to deliver heavier payloads and have much longer ranges? You can't do that with drones. So Cloudline uses helium balloons, so ballonades. Think about it.
Yes.
Think like World War II Zeppelins, but
Yep.
powered by lithium batteries. So they can transport anything from vaccines to medical supplies to food to water. They have up to 50 kg payload capacities and up to, in certain cases, 200 kilometers of range.
Yeah.
Incredible company that is doing work in forestry, fishery, farming, and can get goods to places in the world that aren't accessible by rail, by road, by water, etc.
Mhm.
And it's an incredible business and has clear monetization paths and addressable market. So I mean, I could go on for ages, but in every major sector, healthcare, agri, education, I mean, one of our top businesses we've invested in the education space is again a company in South Africa that does robotic process automation and
Yes.
robotic toolkits for students, all done through tech. Kuro Schools is one of the biggest uptakers of that. So we believe in investing in startups in Africa that can provide market-beating returns,
Mhm.
but have significant impact as well. So I couldn't think of a more
Yes.
exciting career to be in than to be doing this. Now, this isn't like investing in the stock market where you have ample liquidity and you can make short-term trades and returns. This is a long-term play. Venture capital is a typically, at the very least, a 5 to 10 year, sometimes even longer horizon.
Yeah.
And venture capital is not from everyone. Is not for everyone. However, those that are seasoned in the venture capital industry have helped create incredible, iconic companies like NVIDIA, Tesla, Google, Facebook, Amazon, Uber, Dropbox, Twitter. All these companies were created by venture money and then eventually became publicly listed companies. So what we're doing is creating similar companies or helping create similar companies in Africa, but solving real world problems through tech. And it would be incredible to have more South African and African based investors as part of it.
Now, this takes me to the final question, right? Because I know that you've raised a lot of foreign capital. Out of these 200, a significant amount of people who put money into your fund one were foreigners.
Yeah.
I mean, the South African market, generally speaking, you've got a lot of corporates. The mindset in corporates happen to be very risk averse, generally
Yeah.
speaking. The people who leave those corporates and decide to get into funding leave with that corporate mindset of risk aversion. But let's talk about why more South Africans and other Africans should be focusing on becoming LPs in Launch Africa VC.
That's a very good question. I think it boils down to this. It ultimately boils down to your mindset. So most people that are sort of first and second generation wealth um, tend to want to preserve capital, not create capital, right? So by default, your mode in your head is, let's be conservative, let's not lose money. So therefore, most South Africans and African family offices tend to make investments in things like property or in listed equities and things where I'd rather not lose money and I'm happy to make 10% a year and just beat inflation, right? Nothing wrong with that mentality, but it'll never make you significantly prosperous.
Yeah.
Never. If you look at the average wealthy South African or African household is typically older men in their 60s to 70s, right? But if you look at similar demographics in Western Europe, the US, and even India and China, it's young people in their early 30s because they understand risk return trade offs.
Right.
So you're right. Most of our LPs in our Fund 1 and Fund 2, we now have more than 320, by the way, come from Switzerland, Germany, France, the Netherlands, the UK, and now the US, of course, and increasingly the Middle East, Dubai and Saudi Arabia. We have a few African family offices, but they tend to be in parts of Africa that have a history of growing successful tech companies,
Yeah.
aka Nigeria. Now, in our second fund, we have $2 billion companies, Flutter, Wave, and Move. And there is a track record of LPs, limited partners, investing in funds like ours that have seen their capital grow significantly.
Yeah.
And they're able to co-invest alongside us for free. So it's a question of understanding, how do you balance your portfolio?
Yes.
If you have a portfolio, let's say you have $100, right, to invest in. No one's asking you to put a chunk of that into a high-risk asset class like venture capital. But if you have all your money just stuck in equities or in property or in the bank account, you're losing out on that alpha. And that alpha could be 5%, 10% of your portfolio, which often will make up for all the average performers in your portfolio. And it's a pity that corporates and pension funds don't think about this. So one of our largest investors in our first fund is Commerzbank in Germany, the
Yeah.
second largest bank in Germany, through their venture arm. So we would like to see more institutions and family offices invest with us. The minimum to invest in a fund like ours is only $50,000, which is less than
Yeah.
R1 million. And people can pay that off over 12 months if they need flexibility from a cash flow perspective. But the returns speak for themselves. We have between a 25% return in Fund 1 to more than a 50%, 50% return in
Wow.
Fund 2. So I'd like to see more people get involved, and hopefully this good work will carry on.
Zack, always loved your work. When you say you're going to do something, you achieve it. Just love the impact that Launch Africa VC is creating on the continent as well. And if you happen to be one of those executives, and I know there are lots of you watching right now, and you're looking to diversify where you put your money, yes, higher risk, but managed very carefully, I will put you in touch with Launch Africa VC. That once again is Innovate Africa, and I'll see you next week.